It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, smartest guy in the room, the governor of Texas multifamily, the man himself, Mr. Michael Becker.
Hey, Paul.
How are you, sir?
Doing good.
How's everything over at the SPI group?
Yeah, again, we're doing good. Just trying to go hustle up a deal. We're out of escrow, and it feels weird not being in escrow on something. So it's been a while since we haven't been in escrow. It feels like we're perpetually in escrow trying to buy or sell something.
Well, you only buy stuff if it makes sense. So yeah. I know that.
Yeah, it's not a whole lot of inventory out as we record this podcast today. So hopefully that'll change up here pretty soon, but we just got to stop complaining and work harder, basically.
That's right. As you know, Michael Becker is the former banker for a large national bank that made the transition from being a banker over to a real estate owner. So he owns thousands of units, and we appreciate him spending some time with us and teaching us a little bit about the operations of a multifamily property. Question that came in for Ask Mike Mondays. Are there any other or any non-multifamily news / reports you look at in deciding where to invest?
I read everything, right? I'm trying to read the Dallas newspaper, the Fort Worth newspaper, Austin, so all the markets that we're active in. I always kind of a news junkie, especially on the business news, just trying to figure out like what are the big corporations relocating, what's going on in the local economy. So we spend quite a bit of time going through all that. And one of the things that really kind of just jumps to my mind now that you asked me that question was a few weeks ago, I went to the Fort Worth Real Estate Council had kind of the 2019 forecast. So I had a bid meeting in the downtown Fort Worth Convention Center, and they had different speakers, come up, and of course they had the multifamily guy, the retail, office, industrial, and really the one I found the most fascinating. Why I only do multifamily. I thought that was interesting, but really kind of hearing the industrial guy and kind of talking about all the major industrial projects that are going on in Tarrant County and the Fort Worth, and then really started like kind of thinking through that all these, million square foot warehouses, why they don't have as many people working in as a billion square foot office building would be, but you have 400 or 500 jobs that occupy like a Amazon distribution hub or whatever the equivalent is that is in that place. So the type of people that occupy these industrial buildings tend to be more renters, where, if you have all jobs aren't created equal. The jobs that, are six figures, those people that have those jobs tend to be homeowners. So if we're focusing on areas or regions that tend to have a lot of logistical and manufacturing and distribution jobs, the people that work at those types of facilities tend to rent on a higher percentage than, your high-end white-collar jobs would tend to be owner-occupied household owners.
So what else do you look at, and how do you get on some of these lists of going to some of these events?
I just try to pay attention. So, I subscribe to BizNow, which is they have in most of the major markets across. So it's just like a real estate business online publication. So you get an email, pretty much daily or with them like 4 times a day promoting all their events, and then 1 time a day with some news. But it kind of either they have their own articles or they'll link to like the local newspaper and kind of talk about, hey, this company relocated or this company decided to expand. So I pay attention to that. Texas Enterprise Fund, I've been to their website a few times. So in Texas specifically, the state government has a big slush fund where they give economic incentives to get big corporations to relocate here or to expand here. So if you kind of can follow them, you kind of see some of the economic incentives where they're giving them out and where those jobs are going to be located. Usually that little micro area in and around where the jobs are going to be located should see some sort of benefit. So if you happen to own an apartment or you're looking at an apartment near where a lot of these jobs are going, that should be accretive to your future going forward. So I read that. Then just all the local, like I said, like the Dallas Morning News, the Fort Worth Telegram, and then both the Dallas Business Journal and Austin Business Journal, they just cover the business and economic environment in that market, and they're on all the major markets across the country. So I subscribe to both those. So that one costs money. And then we have CoStar. So CoStar has some news. There's Multifamily Executive. There's a bunch of just kind of real estate specific publications out there as well that I try to read those and keep up on the national news as well as but more importantly, just kind of where the economic activity in your markets that you're focusing on, and trying to make sure we're buying well-located deals that are near activity and jobs and expansion.
Well, like going to some of these conferences is that they'll hand out the slide decks.
Yep.
So you're able to get some of the information in high quality that you can share back with your investors or investment group about some of the ideas of expansion. I know when you guys bought a deal down in Austin, 3 months later,
3 weeks later.
3 weeks later, what company was going to go in there?
Yeah, and Apple, we happened to buy a property a few miles away from the brand new expansion to the Apple campus in Austin that was announced towards the end of last year. So that was, partly luck, right? We didn't know that, we didn't have that information, but we're doing the basics of real estate really well, the kind of the 101 about location near employment in the better school districts, near thoroughfares. So we're kind of putting ourselves in an environment and kind of where other people want to be as well. So we kind of put ourselves in a position where we're able to win when other big major employers decide to kind of move in the area near the other major employers in that location.
When investors put money into your transaction, you have to kind of support them with the communication constantly, not only how the property is doing, but just making sure that they're relying upon you as being a good steward of their money and making sure that things are going well in the property. One of the things I think Michael does and his group at SPI do well is sending out these little blurbs, these little communications that kind of give people an idea that there's going to be continual employment in the area. Things are not going to shut off like a spigot for the hose, that you got jobs that are coming. You have these industrial areas that could be anywhere from 80 to 400 to 500 jobs. People want to see how this market is going to be supported, and that if you just push that through with your monthly communications with some of these blurbs, I think people will feel a lot better that making more or feeling better that they invested with you at that period of time.
Yeah, I think that's a good tip to some of the other sponsors out there, that if you kind of, I'd say on top of the local news, and a lot of your investors are busy, they don't live in the area and they don't pay attention to stuff like that. So any sort of helpful news articles, I try to pass that along on a semi-regular basis. Is just kind of a little quick link in the with the monthly reports I send out.
There was another question that came in I thought was kind of dovetail into this one. It says, Mike, when I invest passively with a syndicator for the first time, will I typically be invited to invest in future deals?
Typically, unless you're a jerk and they don't like you anymore. So, yeah, I mean, if you invested in a deal, you certainly would be much more likely than someone who hasn't invested in a deal to reinvest. So most of the sponsor will go back to you unless there's a reason not to. So if somehow you got cross with them or you're super needy and they just don't want to take your capital again.
Is that what gets you on the jerk list?
Yes, needy or just unnecessary. It's okay to ask questions, and it's your right to ask questions, and we appreciate and want them, but within a respectful manner first off, and then we're busy, so we don't have time to hold your hand every single month and talk for 2 hours every single month about the deal that you're in.
You guys will put out these reports that are 100 pages, 150 pages, plus any articles that you found it was interesting that kind of supports why you had made the investment of the property. You tell this message once, you don't want to come back and tell it 2, 3, 4 times to individuals within the group, I would imagine.
Yeah, that's why we try to be consistent and regular with the level of reporting and try to be detailed enough where you get a bunch of information along the way. So, of course, if you have a question, feel free to ask it along the way, but everything's within reason.
Tell us a little bit more about SPI. And again, what does SPI stand for?
Strategic Property Investments.
Strategic Property Investments and Advisory. And again, I've been banging the table here for the last 6 or 7 podcasts, because I think it's something for people that maybe are in high cost areas that may have owned some real estate and are looking for an opportunity to maybe exchange into something else. And they may not know areas that you and SPI know. Tell us a little bit more about what you guys do and how people can take advantage of that.
Yeah, the primary focus of our company is just finding high quality deals, putting them together, and raising capital to be able to close. So we're apartment sponsor syndicators. So that's what the majority of our focus is. But we do offer what we call advisory services. So if you have kind of on the minimum 3 to 5 million kind of in equity, as Paul kind of alluded to, the typical story is I live in California, had a property for 20 years, it appreciated, and I sold it and want to do 1031 and come to Texas, but I don't know my way around the market. I don't know anyone in the market. Can you help me get home on my 1031? So that's usually the most common story that we see.
I like those stories. The guys, the one that I recall the best, I think it's the funniest one, is the guy who had the property on the beach in California, and he had known her for a number of years. And he was actually putting money into it almost every month instead of having money come out of that deal. With tenants in the property, was it a
fourplex?
It was a fourplex.
4 units and 200 units overnight. It was a pretty good little deal.
So then he was taking a lot more cash out by investing in Texas properties and having a property out.
But yeah, so what we can do, like I said, we have to do something of size. But if you have $3 to $5 million in equity, you're looking to put in a deal, it's kind of the value proposition to the brokers network here locally is kind of our clients' money, but our execution. So we can kind of open up some doors that might not be open for you, and then kind of get you set up, help you, do the diligence, underwrite the deal, get the debt on it, close on the transaction, and then get you set up with a team that can help you kind of run and manage the deal going forward.
Yeah, it's your transaction. So it's a good opportunity. But as I say, past performance is no indication of future returns. So talk with the guys over at SPI and get some more information on that if that's something that you would have an interest in. So, Michael, thanks for hanging out and spend some time in the podcast today.
Appreciate it.
All right, I'm Paul Peebles. That was Michael Becker. Have a great day.